Hi there, welcome to Kneppyinvest. When I completed my most recent answer and reply video on Saturday, was it the 13th? 15th, 14th, 13th of April, I realized I'd missed replying to one comment. And that comment was on this particular company called Cann Group. And then lo and behold, there was another comment on one of my videos today from Dicekes3354, who says, was hoping you could shed a bit more light on why Cann Group has been in training halt for so long. I think it's been nearly a month. Now, I've actually owned companies that have been in a training halt for 2 years. So 1 month might not be a long time. But there might be a reason why you think 1 month is a long time, because you go further and say, as a newish ASXer and an old school crypto trader, I'm not really sure what I'm looking at when it comes to training halts and how they work. So I decided, instead of including this particular question in next week's answer reply video, I thought I'll do a standalone video on Cann Group. Hence where we are right now, looking at this fairly small cap company. Pretty sure Cann Group has something to do with cannabis. I could be a little bit wrong. And growing a better light, looks like it is cannabis. Yep, that looks pretty. I'm pretty sure now that this company is cannabis related. Now, the company is a fairly small company. There we are, developing excellent medicinal cannabis products in Australia to improve the quality of life for patients. There was a massive marijuana hype period bubble back about, was it 5, 6 years ago? And I'm pretty sure Cann Group has been around for quite a while. However, if you do have a look at the chart, and hopefully you have not panicked and sold out of all your companies today, another big down day on the ASX, and one of the worst days we've had for quite a while. But Cann Group has been in a well-defined downtrend for a long time. In fact, let's go all the way back. This is the daily chart. In fact, let's have a look at weekly. Let's have a look at the weekly chart. And there is, you can actually see the bubble in marijuana back in late 2017, early 2018. The share price of this particular company went to a high of over $4. Now the share price is 6.2 cents. So probably the lesson here with this company and other companies is don't get caught up in bubbles. Bubbles happen all the time on the stock market, happens all the time in other asset classes. Don't be caught up in it. Don't be caught up in the crowd. I actually did I buy a single marijuana company during that period. Now you could buy it during the hype period, but don't fall in love with the companies and hold it for the long term. These are just short, or they should be just short-term trades, because you could have bought Cann Group at, say, $1, and it could have been a quadruple bagger for you, but if you kept on holding, you'd be down probably about 90% since then, even more than 90%, almost 95% since $1. Anyway, I'm not looking at charts. I don't want to look at charts. It's not the base of the chart share price in a well-defined trend. I'm going to have a look at why Cann Group is being in a training halt for 1 month. So, I don't know why it's gone to that page. So let's have a look at Cann Group. Here it is, Cann Group. Ticker code is fairly easy, CAN. There, no buyers and sellers, which means it went into a training hold initially, and then after a few days, it was put into a suspension. But sometimes a company goes straight into suspension. Usually it's training hold, and then the company can't release whatever they need to release in the time, like 3 days, and then they go into suspension. I have no idea. This is not a company I follow, and I'll show you why I don't really follow this company in a second. Okay, so we have to go back a month. I'm going to look at the announcements right now. I'll zoom in a little bit for you. Zoom in. Okay, so looking for a trading halt. Cann to defend legal proceedings brought by Real Biosciences. That's not a good sign. Cann Group to postpone investor webinar, not price sensitive. Then they released the half-year report on the 29th of February. And then, yeah, they didn't go into a training halt. They went straight into suspension on the 1st of March, the day after they released the half year. So no trading from the time they released the half year to the time they went to suspension. So they released the half year report at 4:33 p.m. When is suspension date? 56 a.m. More than likely, the reason they're going to suspension has something to do with a half-year report. I would say something to do with the auditors. I'm just thinking here, based off what I know, little bit I know on Cann Group, I think the auditors have found some problems with the company. Okay, so let's have a look at some of the other announcements that have been released since then. Funding update. That could be a significant red flag when it comes to this company. Could be the funding. So I'm going to have a look at the half-year report, and I'm going to see if they have any significant red flags, and more than likely they will. Resignation of the CEO on the 21st of March. That's not a good sign. 22nd of March, Cann received $1.9 million payment for Southern Facility assets. Are they selling stuff? And then an ASX query on the 25th of March, which was actually quite a while ago. And more than likely, that ASX query has something to do with why the company is in suspension. I don't know why they have not released anything since then. Okay, so before we have a look at the half-year report, let's have a look at the company's Appendix 4C. And I do have a look at this company's Appendix 4C every single quarter, because this company is a real company in terms of they are selling stuff and they do have cash receipts. But I'm pretty sure whenever I look at Cann Group's Appendix 4C, I move on to the next company, have a very quick look, and then I find straight away things I don't like, and I'll tell you about those things I don't like straight away. So when I open up an Appendix 4C, I skip the commentary. I don't care what management have to say. It's all about the numbers. Numbers don't lie. They can be manipulated, particularly if you go down the financial statement, but the top line is less likely to be manipulated. So revenue is the metric least likely to be manipulated. Profit is the metric most likely to be manipulated in the profit and loss statement. That's also true for the cash flow statement. Receipts for customers, least likely to be manipulated, but as you go down here, more and more likely to be manipulated. However, receipts to customers, this is in the last quarter, 5.38 million. So this is a real company with pretty good revenue. However, the company was operating cash flow negative by 914,000, and that includes government grants and tax incentives of 3.5 million. You take that away, and I believe you do have to take that away. It's not something they receive every single quarter. You can tell that just by looking at the year to date. That government grants and tax incentives is a one-off payment, maybe once a year, maybe twice a year. So if you take that out, the company was operating cash flow negative by about 4.3 million. Operating cash flow negative for the year to date, first 6 months, of over 6 million, and that includes the government grants and tax incentives, which means they're operating cash flow negative by about $10 million in the first half. That's a massive red flag for me, particularly in these times. This could have been okay 2 years ago, could have been okay in 2021, but not in these times. We want to see companies that are profitable, that are generating cash flow. Now, the other thing I'll probably have a quick look is just the spending. Payments for, they spent $7.1 million on product manufacturing and operating costs, $6.7 million on staff costs. That's a significant issue. And $3.3 million on an administration cost. That's for the half year. So I would like to see some cost management or better cost management going on with this company, because they are burning through a lot of cash. And that doesn't include, that cash burn does not include capital expenditure. Spent $2.3 million on capital expenditure in the half year. So they burned through at least $12.3 million in one half. And that's a significant cash burn. Cash on hand. In fact, before we get cash on hand, cash flows from financing activities, there's a lot going on here, including proceeds from borrowings. So it seems like this company does have a debt problem. I'm going to say right now, this company probably has a debt problem. I'm glad I included probably, because maybe they don't. And capital raisings looks like they did, $4.457 million capital raising, but they definitely have increased their debts in the past 6 months. Cash on hand, ooh, that looks pretty ugly. Start of the quarter, they had 687,000. At the end of the quarter, 1.6 million. Now, cash did increase, but that's because of an increase in borrowings and proceeds from the issue of convertible debt securities. What else do we want to see here? Section 7, debt. Oh, this is a massive red flag. Straight away, massive red flag. Now, what is the market cap of this company? One thing I should actually look at is the market cap. I'm saying about $20 million, $20, $30 million, $27.1 million. Okay. So this company has a market cap of $27 million and debt of total financing facilities, 64 million, unused financing facilities at the end of the quarter, 3.2 million. So they are highly in debt. So $64 million of debt on a market cap of 27 million, which means this company has an enterprise value of 91 million, 27, yeah, $91 million. I did my maths, I can do maths. An enterprise value of $91 million. That's the true valuation of this company because you have to include the debt. And what are these financing facilities? What's the interest rates? Not excessive, so 6.7% per annum with a NAB. Was that the NAB? Yeah, all loan facilities are provided by the NAB. So around about 6. I have seen significantly worse than that. I've seen interest rates of 20% on these small cap companies. Okay, so just by looking at the Appendix 4C, and if I went into this particular Appendix 4C in more depth than I usually do, I would have moved on to the next company. And I wouldn't even be thinking about investing in this company just yet. Too many significant red flags just by looking at this. Okay, so let's move on to the half-year statement. So some of the red flags I'm looking for here are debt, cash burn. We already know this company is going to have pretty big debt, 64 million. We probably already know they're going to have a significant cash burn, around about $13 million. And then we'll have a look at the balance sheet. So I'm looking at current assets or net current assets, equity. I'm also going to have a look at the costs. And then I'm going to have a look at anything the auditor has stated. So we're going to have a look at the going concern and then anything they mention towards the end of the report. I forget what that's called, but we'll have a look at it. Anyway, so we know this is going to be pretty bad. And remember, the company went into suspension straight after they released this particular half-year report. So the ASX does have some concerns or some queries for Cann Group's management. So revenue of 8.5 million, a loss of 14.3 million. That was down 24% from the previous half year, but still, first half of last year, but still not good numbers. Now, what I'm going to do is go straight to the financial statement. And the good thing here is, if you want to know what this company does, review of operations, section 2, but I'm going to skip right past that. And thankfully, the half year report is a little bit lighter in terms of volume than the full year report. So we don't have to go far to get to the half year report. Talking about facilities here. So if you want any more detail on the facilities, have a look at that. I think that's not loan facility. Oh, it is a loan facility and then sale of southern facility and then convertible securities facility. And then they talk about tax rebate as well. Anyway, probably something they sell. Some pills, looks like. William Buck must be their auditor here. They probably don't mention anything right there. Usually what I want to look at is at towards the end of the statement. Okay, so let's have a look at all statements to see if we can find some significant red flags. We already know we are, to be honest with you. We already know we are. So revenue, total revenue is actually 11.1 million. Not sure what other income is. We could go to note 4. Let's actually do that right now. Let's go to note 4. See what other income is. Other income is gain on sale of southern facility. I would not include that in the revenue section. That is a one-off. There's some other one-offs here maybe. Contract manufacturing and genetic access rights. Seems like that is not a one-off, but I'm glad they don't include, well, they sort of do include R&D tax refund. Not sure that should be considered income. They do include interest income, but gain on sale of southern facility, I would not include that at all when I look at the profit and loss statement. It's a one-off. So their real revenue, if I can get to it, their real revenue was about $8.5 million, which was a nice increase in last year, which was $5.8 million. So this company is growing. They're growing their revenue. But I have other concerns when it comes to Cann Group. That's their costs. So expenses right here, significant expenses. So we have $5 million in administration and corporate costs, $5 million in direct product costs, $7 million employee costs, and $5.7 million in depreciation and amortization. So this company is, I want to say capital expending, what do you call it? Capital intensive. But $5.7 million in depreciation and amortization is a fairly high cost base. So overall, total expenses, $23 million. So the revenue, total revenue, including the sale of that facility, was half of their expenses. That's a massive red flag. has improved from last year, but this company needs to see significant improving over the next few years to get or become profitable, unless they do some costs saving initiatives, which they probably should do. I would recommend this company do that. And maybe that's why the company is in suspension right now. So a fairly big loss. Now let's have a look at the balance sheet. Okay, so a few things I want to look at here. Debt. Property, plant, and equipment. I want to look at that. How many assets they have. I want to compare the current assets to the current liabilities and also total equity. So they don't have much cash, a little bit of inventory, so $11.2 million of inventories and $104 million of property, plant, and equipment. So they do have a fair bit of assets there. Current assets are $18.7 million. So let's have a look at current liabilities, $72.8 million. Oh, I can see why. Look at borrowings. So last year, most of the borrowings were in the non-current side, and now they're in current. So a lot of those borrowings have been transferred from non-current to current. That's why current liabilities has significantly shot up. And the difference between total current assets and total current liabilities is negative about $55 million or $54 million. That's is a red flag and has to do with their loans. But otherwise, net assets or equity, about $50 million, a $9 million decrease from last year. So thankfully, they do have some assets, inventories, and property, plant, and equipment. But again, remember, this company has an enterprise value of about $90 million. And that would be a little bit of a concern right now, the amount of borrowings this company has and the lack of assets. Not a complete lack of assets, but if this company has to liquidate, they probably could sell their property, plant, and equipment, maybe half that, maybe 2/3 that. I don't know. I'm not a what do you call it, the administrator or that. I'm not saying this company is going to go bankrupt. I'm just saying, based off the balance sheet, there are concerns about this company. Okay. And do we have to look at the cash flow report? We already know it's going to look pretty bad. Yeah, looks pretty bad. Okay. So the going concern, that should be just around about here. Here it is, going concern. Talking about the numbers. And this bit is really important, which indicate, based off their cash burn or cash outflow, that sort of thing, it says here, which indicate there is a material uncertainty which may cast significant doubt as to whether the group will continue as a going concern. And then more than likely after this, they'll state, but the directors believe there's reasonable grounds, and actually stated here, to expect the group will realise its assets and distinguish its liabilities in the normal course of business and at the amount stated in the financial report, despite a material uncertainty existing as at 31st of May 2023, and therefore continue as a going concern after consideration of a range of factors not limited to, but including the following. Then go through quite a few points here to why the directors might be right. Okay, so that's okay. So we already know this company has some concerns about going-ons, whether they can continue as a company in its current state because of debt. I hate debt. Limited amounts of debt is okay, but debts for these type of companies are bad. They can be company destroying. Debt destroys. Too much debt destroys, I should say. You can have a little bit of debt, but too much debt destroys. Okay, let's go all the way to the end. And I'm hoping there's some sort of comment from the auditor here. Sometimes there is. Director's declaration, independent auditor's report. So this is an important section. I don't think many investors would look at this. Okay, so this is what William Bucks says. Basis for disclaimer of conclusion. This could be the most important point of the whole document. Okay, so they mention note 1, and this is what they say. The group's ability to continue as a going concern is dependent on a number of factors, including but not limited to enabling the continuity of normal, I want to say continue, and you just can't say that word by going down that path. So continuity of normal business activities and the realization of assets and discharge of liabilities in the normal course of business through an appropriate mix of working capital and longer-term funding of the business. As at the date of this report, the group has been, this is probably the most important point, I think, as at date of this report, the group has been unable to confirm its ability to secure an appropriate mix of current and longer term external financial commitments to provide sufficient funding to support the group as a going concern. Okay. As described in Note 1, the directors believe that the group will secure sufficient funding and continue to have the support of its creditors and external financiers. However, at the date of this review report, the group and its directors have been unable to provide sufficient appropriate evidence of sufficient committed funding. Okay, we know why this company went into suspension. It would be around this statement here from the auditors. Okay, so let's have a look at some of the others. I want to see if they do mention why they've been in suspension. So no trading hold here, straight into suspension. Okay, so let's have a look to see why they went into suspension. This is from the ASX itself, not from the company. The securities of the company will be suspended from quotation immediately under listing rule 17.3, pending compliance with listing rule 1911AB. I'm just going to Google that. So what was it? It was 1911AB. 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 Let's see what it says. I'll have to zoom in here. Okay, this is what 1911AB says. The accounts must be prepared to Australian accounting standards. If the entity is a foreign entity, the accounts may be prepared to other standards agreed by ASX. Okay. Not sure what's wrong with there. I'm not sure about the standards there. Anyway. In relation to the disclaimer conclusion of the independent order in its review of the Cann's half-year financial report. So probably didn't even have to open up listing rule 1911, because if I continue reading, I would have said why or seen why this company has suspended. It's because of the auditor's final conclusion. They're concerned about the ongoing going on concern, what do you call it, of this company. Okay, so the last thing I probably want to look at, so we have funding updates. So that's like a month ago. Sale of equipment, okay. So they have sold some equipment. That's sort of a good step. About $2 million. Facility extension, okay. So maybe some light at the end of the tunnel for Cann Group. Resignation of CEO. Did he resign or was he pushed? And then they sold something to get $2 million. And a response to ASX query. I'm just going to have a look at this fairly quickly, because it looks like the problems with Cann Group have not been resolved by their answers. But if you want to have a closer look at this, I'm pretty sure it's probably a fairly lengthy, fairly lengthy here. So if we go to the end, this is why, some of the reasons why the company has been in suspension. And they do talk about the independent auditor's review report about the going concern of the company. Note 1, Note 9, talk about listing rule 3.1, which requires a listed entity to immediately give ASX any information concerning it that a reasonable person would expect to have material effect on the price. I'm not sure what's going on there. Definition of aware, listing rule 3.1A. Okay, so a lot of stuff here that the ASX wants from a Cann Group. This is why the company is in suspension. Looks like they had to respond to about 17 questions. So, 17 questions. And if you want to go through all this, I'm not going to go through all this right now. Yeah, I assure you, I not assure you, I implore you to go through this particular query letter, query, whatever it's called, just a query from the ASX. I have no idea. We don't know when Cann Group will go back to being traded. And to be honest with you, even if it goes back to being traded, there is a chance the share price will drop significantly, because there is concerns about this company moving forward. And hopefully I've given you a good idea on the significant red flags I have around this company. Now, there are significant red flags right now, and things have to change. So it seems like they are selling stuff to improve their cash position, maybe to decrease their debt. But the debt, even though it's 64 million, at least interest rates are not that high. But these type of companies, you don't want to see too much debt. Market cap of $27 million, debt of 64 million. That's significant. Debt to equity ratio, have a look at that. That's pretty important. So the debt equity ratio of this company would be almost 3. That's way too high. Typical target people look for is less than 1. I'd be looking at less than 4.5, preferably less than 0.3 when it comes to debt to equity. I don't like debt in companies. The companies have relied too much on debt, and we are now seeing the problems of too much debt right now. There's a chance interest rates might stay higher for longer. It's a chance interest rates might increase from here. We just don't know. And that's why debt is a killer, a company killer. The best way to kill a company is through debt. Anyway, so that's all I got for today's video, or this video, maybe not today's video. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.